Okay, I'm Scott Caithness. I'm the Managing Director of Hawk Resources, and we're a copper and gold explorer in Utah in the United States, where we've got the Cactus project, which we're actively advancing at this point in time.
Scott, good to see you. So, right, we talked, I think, last October. Really, this is an update conversation, and I think timely one, given what we're starting to see with copper in the market and the interest in it. So, let's get into it, if you don't mind. Can we just elaborate a little bit more on the kind of new exploration model that you're applying to Cactus? So, how does this differ from previous geological interpretations of the deposit?
Oh, look, I think what's happened with Cactus in the past is a number of companies have explored it for very large-scale porphyry copper deposits. So we had Rio Tinto as a partner. They were exploring for, the classic size that a company like Rio Tinto would explore for. So very large-scale, low-grade porphyries. They weren't successful with that exploration, but what we believe is that there's opportunity for medium-tonnage, higher-grade copper deposits. So the sort of grades that have been mined in the past at Cactus are 2%. So historically it mined about 1.3 million tonnes at 2% copper with a 0.3, 0.4 gold credit. And also a small silver credit. So that's the sort of grades that we're looking at, but obviously we're looking for more significant tonnes, so medium scale. So we see Cactus as having potential for a cluster of these smaller high-grade deposits. So sort of deposits, there could be an intrusive stock underneath that's got copper in it, but whether it's economic or not is another thing. So that's something that may come about in the future, but that's not our focus at this point.
Okay, and in terms of the geological evidence that led you to adopt this new approach, what are we looking at?
Oh, look, there are a number of historical deposits that were mined in the district. So there's the Cactus deposit that I just quoted the tonnage and grade of before. That was the major mine in the district, but right next door to Cactus there is also the Comet mine, which was a smaller high-grade gold. So when I say high-grade gold, certainly plus 1 gram per tonne gold with a copper credit. So almost like Cactus and Comet are reversed. The prospect that we've drilled in October was the New Year's prospect, which is again about another 500 metres away from those two. So Cactus through to Comet and New Year's, basically a strike length of about 1 kilometre along what's interpreted to be a structural zone. But then in addition to that, there's about another 3 or 4 known breccia pipe style mineral bodies, deposits in the area, but no production history. So Cactus is really the only one that's had a production history, but they have all been mined in the past. There are all old shafts into them. So there is a known cluster of this sort of deposit. And then our exploration is basically leading us to the opinion that there's actually more to be found there as well.
Right. Okay. So you're taking historical drilling and production records, were you saying? Any production?
Cactus had a production record, which is the 1.3 million tonnes at 2% copper that was mined out of it.
Right. So in terms of the insights gained from that, I mean, how much reinterpretation of that data have you done, and what else are you doing to try and understand what you need to be doing in terms of drilling going forward?
Look, what a key part of our exploration is finding out what the signature of Cactus is. Right. So once we understand that, so we have actually done 3D leapfrog modelling of Cactus. We actually believe that there's more mineralisation left in the ground than what was mined in the past there. So what we've done is a lot of the work that we've done has said, well, what's Cactus look like? What's it look like using geophysical techniques? What's it look like geochemistry? Are there structures associated with it? So all the classic things that you would use in exploration. And then the geology of Cactus, are there more of these breccia pipes known? So the work that we've done basically since we started drilling New Year's, and New Year's is part of that story. And just to put in context, I mean, with New Year's, we got 26 metres at 1.3% copper at the top of one hole, and we got 30 metres at 0.8% copper at the top of a second hole. So we only drilled 2 holes into New Year's. They were both oxide deposits, and so we clearly found good mineralisation at New Year's. It's in the same rock types as Cactus, so it's a breccia pipe. similar to Cactus. And as I say, it's about 300 or 400 metres away from Cactus. And what we've done is we've modelled up, we've remodelled the magnetics that was done. And this was a very high quality drone magnetic survey over the district that was done by Rio as part of their porphyry copper search. So it's very high quality data. We understand what the signature of Cactus is, which is a magnetic low anomaly. We've remodeled and reprocessed some IP data that was done, induced polarization. So looking for chargeability anomalies and resistivity anomalies over the whole district. And so we know that Cactus is a resistivity low anomaly. We've also interpreted the magnetics. We believe that Cactus sits at the intersection of two major structures. And then what we know that obviously there's a geochemical anomaly over it. It's an old mine. In the old days, they found it because it was outcropping. So we're using all those pieces of information to identify additional targets. So out of that work, we've actually identified another 12 magnetic anomalies that are the same, very similar to Cactus. We've identified and interpreted the structure with the magnetics, and we've identified that most of those, the vast majority of those magnetic anomalies sit along structures and at structural intersections. We also know that they actually have a combination of either resistivity low anomalies or chargeability high anomalies. And we've done soil geochemistry over not all of the district yet, but a fair portion of it. And we found a series of soil geochemistry anomalies that are, background for soils in the area is about 30 ppm copper. We get values up to 0.1% copper in some of our soils. So we've got a number of targets out of all that, and we're just putting that together. The last stages of our work, we're doing an EM survey at the moment, electromagnetics, and that will see whether we've got conductors associated with the anomalies that we've already got. So it basically will further enhance, we hope, the targets that we've got. We've also got a couple of gaps in our soils. Basically, the soils were done just prior to the onset of winter. Winter sort of curtailed the soil sampling, so we're filling in some of the gaps in that soil, and we should have those largely done by the end of this month. And once we've got the assays back for those and the EM's been interpreted, then we'll have targets ready for drilling.
Okay, so all this again, geophysical, geochemical, structural data, interpretation. You hope that the targeting will improve. How do we move forward from here? You're going to get some assays back, and obviously you're going to then maybe start to communicate where you're going to be drilling, how much you're going to be drilling, and hopefully, find what you're looking for. So when are you going to be able to let us know about the drill planning?
Oh, look, I think realistically, the geophysical results we'll have for the electromagnetic survey we'll have before the end of the month. The soils will be completed, the collection of the soils will be completed by the end of the month, but then we'll have the assays. One of the things we're doing with the soils and going to do with the soils this time round, which is interesting because we haven't done it before and nobody else has done it before, is we're going to actually assay them for gold. It sounds a bit silly given it's a copper gold mining district, but what we've been focused on is the copper, and some of the recent work we've been doing has sort of highlighted that there is potential for a bit of gold near surface, but the district wasn't the subject of a gold rush, back in the early 1900s when it was being mined. So I can only assume that if there is gold there, that it's very fine grained, or it's not of sufficient quantity to have enticed the old timers back in the day, the old prospectors, which implies it's probably not nuggety. So, but as I mentioned, Comet is gold rich, and that's right next door to Cactus. So the gold is unknown. Nobody's actually assayed for gold in soil sampling over the district, and we've actually done more soil sampling than anybody else in the past. So it's an intriguing question that we don't know. So that'll take a little bit longer in terms of the assays to get back. The rest of them will just be done with PXRF, which is what we've been doing in the past, and that's proved very successful. So I would expect probably late April, maybe early May, we'd be in a position to fully interpret the data and basically come up with our next plan, which logically at this point in time, I would think would be drilling.
Right, and so given a company of your size and the stage of evolution that you're at the moment, what do you think is a smart thing to do? Is it like focus on these like near surface oxide mineralization? Do you go testing for deeper sulfide targets? Because obviously that's deeper, it's more expensive. So what do you think you're going to get a reaction from the market and credit for?
That's an interesting question. Obviously, being with a junior company. Look, we did get a bit of a reaction out of the drilling that we did that intersected the oxide at New Year's. But I think the holy grail for us and the mineralisation that is known at Cactus of significant scale would obviously be if we can find and string together a sulfide deposit. So I think that's the important thing if we can. And I would see that the oxide would be a real bonus if we can string together some oxide mineralisation as well. Obviously, oxide to drill out would be a lot cheaper, but the targets that we're actually identifying at the moment, particularly using the geophysics, would be more inclined to be sulfide targets. But we're not talking about drilling 500-600 metre deep holes, things like that. We're probably talking about dominantly the top 200 to 300 metres, I think, even with the sulfide targets. But obviously we've got to put that information together, and some of that will depend on what we get out of the EM. So we're not talking about hugely deep holes with the drilling.
Right, and look, given your experience, like big company experience, coming down to this junior level, it's tricky. It's a very different sort of balances, and certainly need to be very efficient with your spend. So considerations like with the targeting, you've got to go for things that you think will generate the best bang for buck in terms of the market. You're going to have to think about the type of drilling that you do. How much is RC, how much is diamond, etc. So how do you kind of balance those decisions when you want to sort of actually be efficient, and obviously using your, again, big company experience, perhaps you'd have come at it differently. So how do you get that balance right?
Yeah, look, I guess that's always a challenge with a junior company because your investors don't have a lot of patience necessarily for results. So obviously with a large company, if you've got a dozen targets, you might be able to drill 6 or 7 of them before people run out of patience if they're not successful. With a junior company, you're probably lucky to get to the third target. Look, obviously, the thing that we're doing is we are trying to do that preliminary exploration work. So we are putting, we're doing the exploration that's needed to be able to properly rank and prioritise our targets. It doesn't necessarily mean that we'll hit it with the first hole or even with the first target. So we'd like to be in a position where we can at least drill 2 or 3 of these things before people lose patience with us in terms of drilling, because we believe that we're in a district, we believe that we've done the work. Put it this way, we're doing the work to give ourselves the best opportunity of drilling the best targets first. So in terms of the actual techniques for drilling, look, my strong preference would be that we drill diamond. Obviously cost becomes a factor, and we've got to have the funds to do that when the time comes. But the area, the style of mineralisation that we're after, the geological information that you can get, the geology, I think would be far more suited to diamond drilling, and also angle holes, purely because most of the targets that we're looking at, we believe, are subvertical. We're not positive about that at this stage, but I mean, we believe that they're breccia pipes, and that's the common thinking about these targets. And so we would like to drill angle. Most of the holes that have been drilled into Cactus in the past have been vertical holes. So they're not really tested. They haven't really tested the target properly, but they were drilled back in the early 1960s. So, we've learned a lot since that time.
Right, and obviously you're chasing these breccias, and they typically appear in sort of clusters.
Yep.
But you need to kind of get one, be able to sort of understand whether or not there's. I think you said it earlier. You said whether these things can be economic. So finding how many of these breccias exist. trying to understand the kind of, you talk about sort of, I think in some material about it being sort of elliptical shaped, etc. The best way to drill those things out, and then how you hang all of this together to see if you've got, well, not just economic business here. Can this stack up? So can you explain the sort of the process when you're sort of hunting for breccias versus IOCG or porphyries, etc.? How different is it? Harder.
Harder in a sense of, I guess when you're on a porphyry or an IOCG, if you once you've jagged it, it's all a question of scale. So scale and grade at the end of the day, because obviously some of the grades that are coming out and being mined successfully now are really quite low. You're talking about 0.4s, even in some cases as low as 0.3s in terms of copper grades. So if you've got a large scale porphyry or IOCG that's going greater than 0.5, then you probably you're on a good thing. And that's where the sort of targets that we're looking at. We're looking at 1.5 to 2% copper grades. So we're looking at something that's much higher grade, and that's where we believe that the economics will come in, because obviously grade is particularly fundamental. So we won't necessarily have the same scale of operation, but we'll have really good grades, and that's the fundamental that we look for in terms of drilling out these targets. We will need significant intersections. So if you look at some of the past intersections that have been drilled into Cactus post mining. Rio Tinto actually drilled a hole into Cactus. They intersected 42 metres at 1.9% copper and 0.6 gold. It was a great intersection, one of the best in terms of length that's been drilled. But there are grades of, there are 5-6 metre intersections of anything up to 6.5% copper. So there are some very, very significant grades that have been drilled in drill holes that were drilled post mining. So hence our view that there's more mineralization left in the ground than what was mined in the past. So grade will be very important for us. Obviously the usual things with a mining operation, the nature of the rock, how it processes up, all the various things that would typically impact a mining operation. And I think from my perspective, if we had some near surface oxide of significant tons of that, then that provides a real sweetener, because at the moment the oxide that we've drilled at New Year's, for example, and there are holes at the top of Cactus from the old drilling that is again post mining that have significant copper grades in them. If we can string together a nice tonnage of oxide copper, then that provides the opportunity for a heap leach operation, which is a very, very cheap and economic operation to have.
Yeah, obviously. I think that seems to be a model which people have been attracted to over the last 12 months, given the market conditions and state of the equities markets as well. So to that end, in terms of the historic data, I mean, it's some of it's not JORC compliant, given the nature of the data and the age of the data. How important is it going to be to confirm some of that historic data with maybe, say, twinning some of those holes to try and again make sure that you do have a proper understanding of what's going on under there?
Yeah, that was actually the focus of our New Year's drilling. So the objective with New Year's was to twin. It was to twin 3 of the historical holes. We had good location data for 2 of the holes. The third one, we had about 3 different locations. We went with the one that was actually written on handwritten drill logs. And that was actually a hole that was meant to have intersected about 40 metres at about 0.9% oxide copper. We intersected fresh intrusive right from the start of the hole, so we actually abandoned that hole at 47 metres. And we clearly weren't in the right place in terms of it. But the other 2, we got results that were pretty consistent with what the old holes were. So again, we twinned those holes. I believe that we sort of verified the results. But if we were to go and drill, drill Cactus to try and enlarge Cactus, because that's still open. It's still an open deposit. we would have to drill a lot more holes into it, and we'd have to drill them differently to how they were drilled in the past. So it's almost like you'd be starting again. And in terms of the other targets that we're looking at, look, I don't think, apart from New Year's itself, I don't think there's been any drill holes into any of the other targets that we're looking at. So the magnetic data and the quality of the data that we've got wasn't available back when they were being drilled. Some of the targets are sitting under areas that are in landslide materials. So geochemically, they're masked. They certainly didn't have the IP data that we've got as well. So we're basically upgrading a lot of the work, because most of the past exploration that was done at a district scale was done in the 1960s and 70s.
Right. Okay. So I don't want to get too sort of buried into this technically. So I want people listening to this to understand maybe the kind of commercial imperatives, right, and decision making from the team. So, and I kind of referenced it earlier. I think last year people were discovering the needs to actually, I guess, put out a resource. People get a sense, a flag in the sand, as it were. Say, well, this is the size of the opportunity. Then we can go through a process of working out the economics of what we've got here too. So do you feel under any pressure to kind of get a kind of JORC compliant resource estimate done on Cactus? And if so, what do you think that's going to take in terms of number of meters drilled, dollars, however you want to measure it? Time.
Yeah.
Is an important one.
When we talk Cactus, I guess what I'm talking about the district, not specifically the mine.
Yes.
Yeah. Look, I think we're always under pressure to progress it. So it becomes that trade-off of our thinking over the last 6 months. It's that trade-off between, okay, I could walk onto site and start drilling holes. Drilling's the most expensive thing we do. It's also, I mean, you put it in context. You've got a piece of water pipe going down, and you've got a target that might go for 300 or 400 meters, and you're sticking one hole, and maybe you get the opportunity for a second hole, sort of stuff, and that's it. So you've got to make sure that you're giving yourself the best opportunity with that. So our objective will be basically to drill, let's say, ballpark 3 of these targets as a first off. If we get good results, then we'll just keep drilling. We'll just keep going with it and try and delineate that particular deposit. And obviously, if we get good results on the second one, we'll try and do exactly the same thing. So we'll try and progress them as quickly as possible. As individual deposits, they're not huge. We're talking, ballpark 5 million, maybe if we're somewhere between 5 and 10 million tonnes as individual deposits. They might be small, it might be a bit larger. So if we've got multiple of these, we've got the opportunity to progress them quite quickly and quite rapidly in terms of that drilling, because then we're not talking something that goes for kilometres and kilometres in terms of its scale. So it would be a fairly intensive drilling program and would be quite quick. So we would expect that we would be able to delineate one if we got good results. I would think within 6 to 12 months. I think it would be quite quick to be able to progress it. And obviously that's subject to market support and funding and all those sorts of things, and I guess approvals. Approvals is the other thing that can impact what you're doing. In the US on our projects, when we want to drill, we have to get approval for drilling, and that can take a little bit of time. They do archaeological surveys to make sure we're not disturbing any, well, in our district, past mining, like waste can dumps and things like that might be of some cultural significance in terms of archaeological artifacts.
Okay. Like I say, all things being equal. Right, give us the 2025. What are the kind of like deliverables, these moments that you're aiming for, that people should be looking out for? If they're into copper and copper juniors? Look,
obviously the first step for us is, as I mentioned, finishing off the electromagnetic survey, finishing off the soils. Basically, our next step after that will be
what's
designing.
What's the timing on these, Scott? Give us the timing. Give us a sense of that.
The timing in terms of actually finishing the work on the ground will be
all of these deliverables.
Yeah, that will be the end of this quarter, late this month. In terms of getting the results back, I would say we would be ready in terms of having drill program designed mid-May. I mean, I'm saying 6 weeks for assaying, mid-May, and basically from then on we'd be ready to drill. So sort of drilling middle of the year, towards the end of the second quarter.
Okay, and then people can expect results from that, and then you've got some
Absolutely.
decisions to make. Quite nice.
Yep.
Well, look, Scott, I appreciate the update. I think it's like I say, copper is of the moment, and people are a little bit excited about the potential of companies that can prove out some kind of scale and work towards some kind of economic understanding for sure. So appreciate you coming on today, and do stay in touch, please.
Thanks very much, Breccia.